Hey everyone, Jay Soloff here. It's our options trade of the week. So obviously a lot of craziness going on. Markets up and down a ton, based mostly on the COVID-19 spread and potential impact, but also on the oil price war. Just as I record this, the Fed cut rates to zero and is starting a QE program of $700 billion. So clearly a lot of action, and as you would expect with a lot of action, there is of course a lot of options activity. So I'm looking here at Market Chameleon, looking at from the last trading day, we're looking at quite a bit of unusual options activity. So if you want to get an idea of what some of the bigger names are doing, you can sort by volume, and of course SPY had just a ton of action, the S&P 500, ETF, gold. And here's one that's interesting, XLF, which is the financial sector ETF for the S&P 500. Finance and financial companies are certainly going to be impacted by the cut in rates and, of course, the slowdown of the economy due to coronavirus. So looking at some trades here, we can see what people are doing, potentially what some of the big players may be thinking. Once again, sort this by quantity to see what some of the big trades are. You can see a lot of big trades happening here. So this one's interesting. This is a September trade, a put and call at the 22 strike, with the stock at stock's now trading about 23. So the stock was probably trading closer to 22. These were probably at the money options. So we don't know for sure what's going on here, but given the prices, it looks like it could be a straddle. One of the possible trades here is a straddle, which means buying both the call and the put, which is something that you would have, something you would trade if you expect something to happen, a lot of volatility, a lot of movement. Certainly we have plenty of volatility here. You can see someone spent close to $6.50 on the straddle, which is about $4 million on 6,500. So someone spent a lot predicting movement even all the way out through September. So that's a big trade. XLF generally doesn't move all that much. So we can take a look here at what that may look like. So here is a graph of XLF. This is, of course, on you can see it normally doesn't move a whole lot, and then boom, it's obviously cratered here, and it's come back up after hitting a low of around 20. It's back up to about 23. So this is at the 22 strike, expecting $6.50 move in either direction. But that's actually, that's about a 27% move. So that's a big move, although even though it's 6 months away, that's a ton for something, particularly a lower priced ETF like XLF. Looking at that, you can see here's the volume that happened, the 22 strike. Markets are really wide right now because of all the volatility, but that's an interesting trade if you think financial companies are going to move quite a bit over the next 6 months, and it's very possible that this can move 27% up or down, particularly given where interest rates are. Then that's not a bad trade to make. Of course, you have a fair amount of capital. You have to spend $650 per straddle, but you have to think that banks could be hurting with the recession and the ultra low interest rates compressing their profits. But on the other hand, maybe that is a situation that could help spark a bunch of financial related activities, mortgages, refinancing, loans. If there's enough liquidity for that, that could actually help the bank. So that's probably why there's this multi-directional bet here, though, or it could go either way. Or maybe they're just assuming volatility is going to go so high they'll be able to get out of this trade for a profit, even if it doesn't move all that much. So this is the sort of things I talk about in my various services. You can get into my cheapest service for $49 a month, Option Floor Trader Pro. You can see the link on this page. So check it out, and everyone stay safe out there.